I suspect that Chair Powell will do what he has done consistently, both during the Biden administration and the Trump administration, which is reiterate his absolute commitment to Fed independence. I don't think he's buckled an inch under President Biden, and he hasn't buckled an inch under President Trump. And I think he's been pretty data-driven when it comes to leading the Open Market Committee. And I suspect that he will reiterate that today when asked about it, which, as you said, I suspect he will be.
Well, as you point to the data-driven nature of the Federal Reserve, where, Bharat, exactly do you think this morning's data would drive them? Because, yes, 3% on the headline seems like remarkable growth, but when you look beneath the surface, what do you see?
Yeah, I think 3% is pretty misleading for a couple of reasons, right? We've gotten a huge whipsaw effect since the beginning of this year because of Trump's tariffs, where you saw a huge surge in imports in the first quarter of the year and then a huge decline in imports in the second quarter of this year, which contributed to these big changes in annualized GDP quarter by quarter. To me, what you should do is look at the two quarters together. And when you combine them, what you see is annualized growth of about 1.2%. And that's very low. But going into the year, people were projecting about 2% growth for the year. And so I think it's fair to say that the cost of the Trump agenda when it comes to growth has been about 1 percentage point on an annualized basis, which is very significant. Also below the headline, you see a decline in business investment, which again reflects what I think we've been seeing in the survey data of a lot of pullback in investment as businesses try to navigate and wait and see what's happening on the tariff front. Consumer spending was okay, but not very robust. There's a lot of troubling data under the hood of the GDP report, and I think that when you layer in the fact that we're likely to have a bigger impact from tariffs actually hitting prices in the second half of the year, I can see why the Fed is adopting a wait-and-see attitude.
Well, if we're seeing a slowdown here over the first half of the year, there are concerns about clearly where we're heading in the second half when the impact of tariffs finally begins to show up in the hard data here. Bharat, there's an expectation that the Fed won't cut today, but might be more likely to cut in September. Wouldn't that be the opposite?
Look, I'd be surprised if they tip their hand today. I think that they're going to want to see 2 additional months of data coming into the September meeting before deciding what to do. I just think that there's an enormous amount of uncertainty. Look, the way I see it is that you have a labor market that's been hanging in there. It's still low 4% unemployment. You're seeing some stagnation in terms of additional hiring, but you're also not seeing a lot of layoffs. So you basically have a stable labor market in decent position. Meanwhile, you have inflation, core inflation, tracking to be about 3% for the year, which is quite a bit above the Fed's target. So given the state of the labor market and the projections on inflation and data about year ahead inflation projections from folks being quite high, I can understand why the Fed's not itching to cut. And I think they're going to want to see 2 additional months of data, especially on the impact of tariffs on prices, before deciding what to do in September.
Well, of course, the Fed is not just kind of one monolithic viewpoint either, Bharat. We are expecting that we could see some dissents today from the likes of Christopher Waller, who has suggested he's worried about what could happen to the labor market if they wait much longer. How seriously would you take dissent today, knowing that there may be a bit of jockeying to be the next Fed chairman at play as well?
Yeah, look, I think without denigrating anybody, I think that that's a factor here. There are people who are looking to position themselves as a good choice for Trump when he makes his selection to take over for Chair Powell. Look, that said, I think Governor Waller has been quite accurate and quite prescient in his projections about where the economy is going over the last couple of years. And so I don't want to diminish his viewpoint in particular. But look, I think people are trying to position themselves for Trump's choice. And obviously, the president wants interest rates to come down, though, ironically, he's been going around talking about how the economy is absolutely booming. And as people watching the show know, that's not really a good argument for cutting rates. So you kind of wants to have it both ways.
Jay Powell will be walking into this news conference just hours after Procter & Gamble said it would be raising prices on about a quarter of its products in the U.S. Bharat. Mid-single-digit increases across categories, according to a spokesperson. What do policymakers think of a headline like that?
Well, it's concerning. You're hitting consumers where it hurts, the types of everyday goods that they're going to pick up at the grocery store, at the convenience store. We lived through it during the Biden administration. People don't like to see those types of everyday prices go up. And the way that the president has conducted tariff policy basically guarantees that those types of staples, from the things at the grocery store to the things you're going to buy at Walmart and Target, are going to go up in price. How much is the question, not whether it's going to go up or not. And when you have that prospect of price increases coming in the second half of the year, which could feed through into a more sustained increase in inflation, you can understand why the Fed is adopting a wait-and-see posture. As your previous guest said, if Donald Trump had come into office and done nothing, and just sat back, not announced any of these tariffs, and just waited, the Fed likely would have cut rates multiple times by now. That was the trajectory that they're on. But all of the uncertainty that he has introduced into the economy has not only squelched business investment, it has also made it basically impossible for the Federal Reserve to cut, which has, in effect, continued to lock down the housing market because nobody wants to trade out of a 2.5% mortgage for a 7% mortgage, which means nobody's selling.
Bharat, we have less than a minute left here, but if you could ask one question of the chairman at the news conference today, what would it be?
I want to ask him, what are the 2 or 3 data points that you're most focused on over the next couple of months as you make your decision for September? In the past, under the Biden administration, Chair Powell said he was very interested in inflation expectations like you would get through the Michigan Consumer Survey and so on. That was a little bit surprising for me because there's some concerns about the validity of that data, but it was an important factor in his determination. What are the things that he's going to be looking at over the next 2 months to determine, in particular, how are tariffs feeding through to prices? Are there a couple line items that he's looking at, a couple sets of goods where he thinks the tariff effects are going to show up? To me, that's the real question, because I don't think that they're going to tip their hand as to sort of guaranteeing or strongly suggesting that they're teeing up a rate cut in September.